Every bull market, I see people making the same mistakes and it pains me. And I'm hoping this video puts an end to all that silliness and helps you avoid going down that path and losing your hard-earned savings. You see, every bull market has its darlings, right? Stocks that make the headlines, dominate conversations, and ignite dreams of quick wealth. And every bull market, I get asked the same question, right? Should I invest in Nvidia or GameStop or gold? And now it's MicroStrategy. And my answer? It depends. Right? It's not me dodging the question, it's because smart investing is all about context. See, most people make the mistake of thinking that if they pick the right stock, they'll be set for life. But good investors know that it's not just about what you invest in, but also about the how and the why. And in today's episode, we're going to be diving into the 3 key factors that you need to consider before investing in stocks like MicroStrategy. Now, first, it's your stage in life. Are you in your 30s or 50s or nearing retirement? Next, what's the purpose of your investment? Are you building wealth or generating income or something else entirely? And third, it's the quality of the investment itself. Is MicroStrategy really a good business and is it priced right? And at the end of this video, I'll pull all of this together and share the exact approach that helps make our students money consistently in a low-stress, low-risk way that doesn't take up all their time. And we'll of course do all of this, mastery not required. Now, for those of you tuning in for the first time, welcome. I'm Tim Loh, former corporate lawyer, and now I teach busy executives and business owners how to create multiple income streams using their purpose instead of mastery so that they can live purposeful, meaningful lives. Over my 20-year legal career, I've worked with startups, private equity, and multi-billion-dollar firms. Now, I've seen firsthand how fortunes are built and lost through investments. Now, I didn't just read about these lessons in books, right? I've lived them. From the conservative world of index-listed companies to the high-stakes world of startups and private equity, I've learned what separates the smart investors from the gamblers. And today, I want to share those lessons with you. Not just the mechanics of investing, but the mindset shifts that will change the way you think about your money and your future. So if you're ready, let's jump in. First, it's your stage of life. Now, here's the truth that most people overlook. Your stage of life should dictate your investment strategy. What's a smart move for a 25-year-old could be a disastrous move for someone in their 40s. Recently, a coaching client of mine, we'll call him John, right? He came to me with this dilemma. He's in his 40s and he'd been buying shares of MicroStrategy, right? And he wanted my opinion on whether he should keep going. My advice? Time to pull back. And thankfully, he did, just at the right time. And here's why. Because in your 40s, you're in a stage where capital preservation becomes just as important as growth. Sure, you can still take calculated risks, but they should be a small slice of your portfolio, no more than 1 to 5% max. The rest should be focused on assets that provide steady, reliable growth or income. Right? Time isn't as forgiving when you're in your 40s. If the market turns and you're overexposed to a volatile asset like MicroStrategy, you could lose years of hard-earned progress. And trust me, I've seen this way too many times. After the last crypto boom, I had a client come to us and he's in his 50s. Now, I won't go into the details, but if you want all the gory details, this case study is on our website, which I've linked in the description. Now, in his words, he lost a ton of money in crypto and then his job, and he had to rebuild. And rebuilding a portfolio in your 50s is a lot harder than doing it like in your 30s. But to his credit, he stuck with our risk-managed approach, and that's a lot harder than it sounds because a lot of people in his situation would have said, I need to double down. But he's making money consistently and he's building consistently using what we call purpose-led investments, which you can do too, right? By being clear on the second point, which is the purpose of your investment. Ask yourself this: what's your investment for? Are you building a nest egg for retirement or building passive income to live off or funding a dream business? Or are you investing because someone you had drinks with or someone you saw on YouTube told you to invest? Or that you want bragging rights, at your next drinks night or golf game? Now, don't laugh, okay? I'm not being funny here. When I dig in with some of our new students, these are the sort of answers that actually come up. I mean, eventually, once I've pushed hard enough. But seriously, the answer to this question should guide your strategy. So let's break this down. Right? If you're building a nest egg and your goal is long-term wealth, the key is consistency over excitement. Right? This is where you might consider index ETFs like SPY or QQQ, which is the S&P 500 or the Nasdaq 100 ETFs. They're not flashy like MicroStrategy, but they work. And here's a real-world example. Right? If you had invested $1,000 a month into the S&P 500 over the last 20 years, you'll now have over $1 million. For the Nasdaq 100, that number jumps to 1.8 million. Now, people love to dismiss index funds as boring, but boring is what gets you to retirement without losing sleep. Now, on the other hand, if you're creating income and if your goal is cash flow, then you might want to consider like dividend stocks or REITs or other income generating assets. Now, these investments might not grow as quickly, but they'll put money in your pocket regularly. And we teach our students to use a hybrid approach, right? Build their nest egg with growth focused investments and portfolio balance to income generating assets. Now, whatever your purpose, your strategy needs to align with your end goal. Otherwise, you're just throwing money into the wind and hoping it lands somewhere useful. Now, next, I'll get into specifically whether or not MicroStrategy is a quality investment. But first, I want to give you a gift where we'll go in depth into all the strategies we've covered in today's video. It's a 4-day lifestyle income workshop, and it's an on-demand video workshop, which I want to give to you absolutely free as my gift to you for hanging out with me today. You'll be learning why trying to master your income streams has caused passive income to elude you all these years, and how you can shift to what's working for us, right? Purpose-led income streams. You'll learn what the wealthiest people and most profitable companies use to remain profitable and to grow their wealth and income in a risk-managed and sustainable way. And finally, why most stumble when trying to grow their income and wealth and how you can avoid those pitfalls so you can start taking concrete steps to building your income streams and living your purpose instead of going one step forward, 2 steps back all the time. Now, I pull back the curtain on what I'm currently doing for passive income, mastery not required, of course, and I introduce you to some of my favorite passive income streams that I'm using right now that are putting money in my pocket, even as you're enjoying this episode. Now, all you need to do is to head over to start.purposestreet.com/workshop, which is on the screen right now if you're watching on YouTube, and in the description of this video or podcast. Just put in your email address and my team will send the 4 videos right to your inbox. You can watch it anytime you want, and it's fast and it's actionable, so pay attention and take action. Because whether you're a beginner who hasn't the faintest idea where to start, or you've got income streams but they're causing you stress and anxiety and taking up all your time so you can't live your purpose, this on-demand workshop series will change your life. It's completely free as my gift to you. Now back to the episode. So now we need to look at the quality of the investment. See, at this point, MicroStrategy is essentially a Bitcoin holding company. Its software business, which was once its core focus, has now taken a backseat. Now, this makes it a speculative play tied directly to the price of Bitcoin. Now, the word speculative is thrown about a lot, but let's talk a little about that concept so that helps us differentiate between speculation and actual investing. Let me give you an example. Land, for instance, is inherently speculative. Why? Because there's no reliable way to value it on its own. See, its worth is purely based on what someone else is willing to pay for it in the future. And there's absolutely no way to determine that. But now, let's put an apartment block on that land. Now, suddenly everything changes. You can calculate the value based on the rent that those apartments generate. And through asset improvement programs of schools come up nearby, rent could go up. And so you know the sort of rent you get, and from there, what you can sell it for in future. Now, the value of that land has moved from being just speculation to something tangible, an investment with fundamental value. This is something you need to keep in mind, especially as you decide if an investment is worth your hard-earned money. Now, I can't do a deep dive here, but I've done a video of this in the past, which I've linked in the description. Now, I don't personally believe in speculative assets. You can make money from speculative assets, but I rather trade them instead of investing in them. Meaning, once I make money, I'm out, right? I don't hold on. I prefer investing in assets that can be valued based on the income they bring in. Now, all that said, if you still want to get into speculative assets, you need two things. Firstly, a deep understanding of that asset itself, and more importantly, the willingness to lose your entire investment. And that's why I don't believe in speculating, because I hate losing money, right? And to prevent myself from speculating, when evaluating any investment, I always ask myself two questions. Is this a good business? And is it priced below its valuation? Now, for me, MicroStrategy fails on both counts. Now, there are better growth companies out there with stronger fundamentals and more predictable prospects. If you like MicroStrategy's AI business, for instance, then maybe consider a company like Palantir. For disclosure, I'm a shareholder of Palantir, and this isn't investment advice. Whenever you hear anyone on YouTube or wherever it is you consume information, always get your own understanding and do your own due diligence. Right? Never invest based on what someone else tells you, no matter how credible they seem. While Palantir certainly isn't without its risks, compared to MicroStrategy, its business model has real-world applications, and its growth potential is based on a lot more than just market speculation. But even with Palantir, there's a caveat, right? Neither MicroStrategy nor Palantir is worth the inflated prices they're currently trading at. Because a good investment is only a good investment if you get it at a good price. You see, investing doesn't have to be exciting, and that's one of the biggest myths I see. People chase the hot stocks because they want to feel the rush of a quick win or the bragging rights at a pub. But that's not investing. That's gambling. Real investing is boring. It's methodical. It's about putting your money to work quietly so you can focus on living your life. I'd rather have boring investments and get my thrills elsewhere. Also, investing doesn't need to be complex. In fact, the best investments often look too simple at first glance, but they're the ones that quietly grow your wealth over time. Because investing is a tool, a means to an end. It's not a thrill ride. And done right, it gives you the freedom to live a life of purpose and fulfillment. So, should you invest in MicroStrategy? Well, I think I've said enough in this video, but ultimately you need to decide. And to help you, I want to give you one more tip that I've promised right at the beginning of this video. And that's a tip that helps our students focus on assets that make money consistently, even in the face of all this temptation. See, whenever you're tempted by speculative assets, which can't be valued based on the income it generates, remember they're much more risky and pushed by people that are already in, right? People pushing the Bitcoin and gold, telling you it's a once-in-a-lifetime chance to make generational wealth. They're already in. And because there's no way to value them, it makes them that much more risky, which is why I said you need to be prepared to lose everything you put in. So when the FOMO or the fear of missing out hits, remember that and consider if you would prefer holding assets that actually bring in money and that can be valued by the money that they bring in. Now, I personally far prefer the latter, and I go into all that in the video linked on the screen right now, or check out our free course at start.purposetree.com/workshop, and I'll see you on the next video.